Hello, good evening, everyone. Good afternoon, good morning, wherever you're logging in from. Welcome to yet another class where we have um, valuable information to share with us and also get your questions. So today we'll be looking at price movement and how we can apply it. So we'll do what we call back testing, because some of us have asked me, how do we do a back test? Um, don't mind my writing. Um, so back test, let's just put it like this, back testing. So we're going to back test a process to see how price moves. Give me a sec. Please, once you come in, just mute yourself. Okay, I think I've gotten it. Okay, good. All right, so let's go on. Once Billionaire Riwo comes in, he will take over, but I've not seen him yet. I hope he can join and just indicate once he comes in. Okay, so as we know, if price is moving up, right, from a point A to a point B, it does not move in a straight line. Instead, what it does is to move up a bit and then push back down or pull back, then push up a bit, then pull back down, and then push up again, pull back, and then push up again. So while it's pushing up, it does what we call break of structures. So it's breaking structures here. This place is a high. This is a lower, is a higher low. This is a higher high. This level here. Okay, and then it repeats itself again. And then you have another higher low there. And then a higher high, which caused a break of structure there. Right. So what we want to do, we are on the 15 minutes chart. We want to look at this process, this break of structure process, to see how we can apply it. So I'm going to do 1 week test, last week's price action on pound yen. If we have enough time, maybe we'll do one more. But let's see what we can do here. Okay, so last week was 26th. Last week Monday started at 26th. So let me do a replay here, a bar replay. Okay, so let's start from somewhere here. And then we can look at how price moves. So just do one candle at a time, okay, and then see how price behaves. So right off the bat, we can see a break of structure there. And so price was initially moving this way, it pushed down, and then pushed up. Please excuse me 1 minute, please. Okay, sorry about that. Um, I think Billionaire Riwo is about to come in. So I will okay, so once he comes in, please you should just indicate and we'll take it up from there. So right, as we were saying, so here we have a break of structure. So with a break of structure, that means we have something like this, and then all we're looking for is for this pullback. We put our stop loss somewhere there, and then expect price to continue going up, right? So let's see what price did. So assuming that we now take, where is my tool? Let's say we take a long position somewhere here. Put stop loss there and put take profits maybe somewhere there. Okay. Beautiful. Okay, so let's see if price will trigger us in. And okay, so we're triggered in there. So we're expecting price to do that, to push up again. So this was the high. So this was the first break of structure to be pulled up there. So now we're expecting it to come down and then also break these highs here. Okay, so let's see if price will do that. So we go one more step. Let me make it a bit faster and see how price goes. So we're already in the trade. Or it just be moving sideways. Okay, so let's see. You can see even my zigzag thing there. Okay, so there it is. It eventually hits our level there. Okay, so you can see how price just moved very nicely. We made a break of structure there, a push up. We were expecting a pullback and then another push up. So although this one did just push down a bit, it came up here and then went sideways. Then eventually it went up, giving us a break of structure there. Okay. Beautiful. So let's see how we're doing. Is Billionaire Riwo here now? Oh, Billionaire Madam Prosper. If you're in, please just indicate. Let me know so I can hand over. All right, so that's the first bit there. Let's see. So what's the next thing that we're expecting here now? So where is our higher low? So this is our last level. When price then pushed up, it's actually pulled back a bit there, then pulled up. But according to this, our zigzag indicator here, right, this is where it is right now. So we just use this as our lows and expecting that this is our break of structure here, expecting price to pull back and then possibly continue going up. Okay. So let's see if it will give us another trade. Where is it? Yeah. Long. So let's say a long position. Okay, Billionaire Riwo is here. Oh, very good. So let me hand over to you and then allow you to share your screen. Very good. So just in summary, before Billionaire Riwo comes in and takes over, um, when we are trading, all you need to do is follow your process. We can see what happened here just very nicely. Break of structure, a push up, and then on a pullback, you enter the trade and you went very nicely. Okay, good. So Billionaire Riwo, over to you.
Okay, good evening, everybody. Um, my name is Riwo, and I'm the host for this evening. I'm sorry about what happened last week. So thank you everybody for this. Thank you for the privilege. I really appreciate. Let me.
Good, thank you.
Can everybody see my screen?
Yes, you can.
Okay, okay. So just like what I was talking about last week. Basically, the things we look for is sweep of liquidity. Rule number one is sweep of liquidity. Then rule number two, your first break of structure. Then rule number three, a little retracement. Then a second break of structure. And that's what gives us POI, and that's where we buy from or we sell from. Maybe from a demand or a supply zone, depends on what we are taking. So I don't know if I can still go back to that example. There was an example I gave last when we had this class, and it played out, but the risk trading view does not allow you go back more than I think 4 days or so. But on your phone, you on your MT5 on your phone, you can always go as far back as you want. Let me get straight to the point. So for example now, there's a setup here for a sell. First of all, before you take a buy or a sell, you must always get your bias. Your bias is your direction from your higher time frame, because your lower time frame follows what your higher time frame is telling you most of the time. So if we look properly, we can see that this volatility 10 index and we are an uptrend. Uptrend is characterized by higher highs, higher lows, and break of structure basically. So there's a break of structure here to the upside. So it indicates there's an uptrend. There's another break of structure here. It indicates an uptrend. So basically, if you backtest a lot, all these things become easier for the eyes to find. So from our 1 hour time frame, we know that we are bullish. That's uptrend. So we know that we should be looking out for buys, not sells. Even if a sell setup comes, don't take it, because most times it might go maybe 50% to take profits, then reverse. And we're always looking to hold trades to full TP. So you don't go against the bias of the market. Let me look if I can see anyone that has recently played out. I know I had one on V25 some days ago, a buy. I think it was on Friday. A buy that played out. Yes, this is one example. This is your sweep of liquidity. This is your rule number two, is your break of structure. This is your first break of structure. And this little movement here is what gives us the retracement after the break of structure. This movements here, around here. That's what gives us our retracement. So the retracement is what gives us our structural liquidity, if you remember, or your inducement. So this is your inducement. This is your inducement. This point here. Then you look for a second break of structure. And after I give you an inducement here, you can see the price went up and give a second break of structure around here. So here's your second break of structure. Then now these are inducements, liquidity sweep, first break of structure, second break of structure. So now all is left for you now is for you to mark out since it's a buy, mark out your demand zone. Your demand zone is basically your last, if it's demand, is your last bullish candle, your last bearish candle before a sudden bullish move. So in this case, this red candle here before the sudden buy is our demand zone. So you draw it out and wait for price to get there, and just like magic, see it's bought all the way. I see there was something pushing it from here. Let me give you guys an example, another example. So so can everybody see how this played out? Can you guys see? Can everybody see my screen? Okay, so like I said, let me label it. So it becomes easy. This is your liquidity sweep. This is your first break of structure. First break of structure. This is your retracement that gives you your inducement or your structural liquidity, depends on what you want to call it. So this is your inducement or structural liquidity. Then this here gives you your second break of structure. Second break of structure. And this is where your TP is. I hope it's clear to everybody. Let me draw out the model again. So this is how it is. Then here's how it is. Then wait for price to come down to your demand zone and get fruitive. This is your liquidity sweep, like what we drew down there. This is your first break of structure. This is your retracements that give your inducements here. This is your second break of structure. Then this is the demand zone that price bought from. So this model here exactly is what I try to replicate in this setup. Let me look for a clearer example. I know there were a lot of examples on volatility cell 25. I had one, was it? Okay, I had one on V50. That was a sell. Let me look for a sell opportunity. Yeah, that was a sell I had on V50. So I had a sell on volatility 50. So let's look for this is a sweep of liquidity. Use our break of structure to the downside to indicate that we're in a downtrend. These are retracements. Price went up a little as it was buying to give us our structural liquidity here. Then price gave us our second break of structure. You can choose this as a second break, or you can choose this as a second break. It depends on you. But what's most important is where you choose as your demand or supply zone. So this is a sell example. So it's a supply zone select. A supply zone is basically your last green candle before a massive bullish move. In this case, this green candle is our supply zone. So we draw it out. And trading is a waiting game. So you just have to wait till maybe 5 hours, few days. And as price got there, see how it's played out. Played out very clean. This is our full TP. Our TP is here, the lowest low before. This is our full TP. So this is a sell example of what played out. And look for another sell example. Yeah, so this is another one. There's a sweep of liquidity here. There's a break of structure to the downside here. There was a retracement that gave us a structural or inducement here. In case you're confused, your structural liquidity is basically the highest high before the top. So if this is where your sweep of liquidity is, this is the highest high before this place. So that's where your structural liquidity is. If it's so it's the same thing for a buy too. So after your structural, it came down and gave a second break of structure here. So all the rules must be complete. If one hasn't been met, you don't take the trade because it makes it less likely to play out. So like I said before, you choose your demand zone. Okay, this is sell opportunity. So you choose your supply zone. The supply zone is your last green candle before a bullish move. That's this candle here. You pick it. Okay. After this I'll do one on currency pairs. This will be the last synthetic. Then okay. Somebody said I should run everything through from the beginning. So I'll start again. Let me go to a blank slate. So what I said, I basically trade a model, and this is the model I trade. This is basically what I look out for in the market. This is for my buy opportunity, and this is for the sell opportunity. And a minute, please. Let me draw it out well for the sake of those that were not with us the last time. So this is for buy, and this is for sell. So this is what I look out for buys, and my buy and sell is guided by the rules I mentioned before. Let me mention them again. Rule number one: liquidity is basically movement in the market. There's no technical term to it, no technical definition. liquidity sweep, a sweep of liquidity. Then you look for your first break of structure, that's your BOS. Then rule number 3, after your first break of structure, there should be a retracement. A retracement is basically price moving in the opposite direction. If everything was selling, price starts buying for a little while, that's a retracement. So number 3, you look for a retracement. Then number 4, you look for a second break of structure after the retracement is done. Second break of structure. Then last thing is look for your demand or supply zone, where price is most likely to buy or sell from. So for the sake of the person that was not here before, let me go over to the currency pair and show you everything with it. um, so I'm coming. My trading is loading for my currency pairs. I've not used it in a while, so sorry everybody, give me a minute.
Thank you. When you go through this one, can you also look at currency pairs as well?
Yes, it's the currency pair I'm trying to open. I'm opening my trading view. That's what I'm doing. Because it seems most people trade currency pairs. Okay, it has loaded. So let me look. Let me go to. Let me use. Let's see GBP USD. Let me go from my higher time frame. So this is a 1 hour time frame, and if you can look at the 1 hour time frame, you can see that we are bullish. So I know that I should be looking for buys. But since the currency pair market is very volatile and is influenced by a lot of other things, I don't advise you trade on your 5 minutes time frame. But for your synthetics, it's safe to trade on the 5 minutes. But for your currency pair, your 15 minutes and above is safe. You can only use your lower time frame for confirmation. So let's see if I can find the same thing. Let's see something that's played out already. Okay, this one. I didn't even know I had something here. This is GBP USD, and this played out, I think, sometime within March. So the same thing I said. This is 1 hour time frame. So we know that we are looking for buys. We know that we are bullish already. So first things first is your sweep of liquidity. That's this tiny move here. Let me zoom in so everybody can see. Yes, this is your sweep of liquidity here. Then your first break of structure, that's the rule. After your sweep of liquidity, there should be a break of structure. So this is your first break of structure to the upside to confirm that yes, okay, we are still in an uptrend. Then there's a retracement. Your first retracement gives you your structural liquidity. So this is your structural liquidity here. And what happens? It gives you your second break of structure. This is another break of structure here. Your second break of structure. I think I should label it. This is your sweep. This is your sweep of liquidity. This is your first break of structure. and this is your structural liquidity. And this structural liquidity was caused by your retracements, by the retracements. So this is your structural liquidity or inducement. Then after your structural liquidity or inducement, it goes up again to give you a second break of structure. That still confirms that okay, we are still in an uptrend, we are safe, because you should not be trading against the trend. Second break of structure. And so what you have to look for next is your demand zone or your supply zone. This is a buy trend, so we are going to look for a demand zone. So here, like I said before, your demand zone is basically maybe your red candle before a sudden bullish move. So this is the red candle before a sudden bullish move. But me, I like my entries being sniper. I like very, very tight stop loss. So this whole place is too large for me to consider it as a demand zone. So I go down from this 1 hour time frame. This is the candle we are considering here. Let me zoom in. So this candle here, this red one, is what we are considering as our demand zone. But this candle is too big. Our stop loss is going to be too large. So I go down to my 15 minutes time frame to look for that same candle, to look for the demand zone inside that demand zone. For those that listen to, what's his name? If you listen to Charlie Poppy, you know that he used to say, inside that EVA, another EVA the inside. So this is an example of what he means. This is that 1 hour candle now. So these are all the candles that make up that 1 hour candle. So inside here now, we'd still look for the 15 minutes demand zone that falls under that 1 hour demand zone. So right here, this is the candle here. Let me change the color so that it will be more okay. This red candle here now becomes the demand zone that we've got from our 1 hour demand zone, so that our entry is going to be more sniper and we'll have a tighter stop loss, and at the end of the day it gives us a bigger risk to reward ratio. So that 15 minutes candle, we can now extend it out, and all you have to do is wait for price to get there, and boom, this is how price reacted from there. This was where price reacted from, and your stop loss is just going to be a few pips below the candle. And this is your TP. Your TP is your higher high before price started coming down. So this was the whole move. This was the whole move before price started approaching your POI or point of interest. So your TP is going to be your high within your highest high within this zone. And your highest high within this zone is here. So let me take that out now since it's clear. So this is your highest high. This was your highest high before price started coming back down to your point of interest. So this was your highest high, this place here. So that's going to be our TP. So you go all the way up. This is your TP, all the way to this place. This is your TP. So that's a risk. That's RR of 1 to 9.33. And let's see how long did it take for price to approach to reach TP. I think this was around 11:15 on March 26, and price reached TP on Wednesday, 2nd of April. So I think it took roughly 8 days, or yes, roughly 6 days, almost 1 week, around 1 week to reach there. So basically, this demand and supply makes your entry sniper. Sorry, what's happening? Okay, the demand and supply makes your entry sniper. Let me look for another example. Okay, I've seen one here, another one that played out inside here. If you can look closely here, I didn't see this before. There's a sweep of liquidity here. There's a break of structure. Price broke structure to the upside. You can consider this a break. You can consider this a break. And price gave a retracement to give us our structural. So this was our structural liquidity. These are structural here. And price proceeded up to give us a second break of structure here. So all we need to do is look for the demand zone here in this place. The demand zone here. The demand zone here. But if we pick this candle, if we look closely, this is a 15 minutes time frame. If we pick this as our demand zone, this should normally this should be our demand zone, this whole red candle. But if we pick it because we are looking for a tight stop loss, it's going to be too big. It's going to reduce our risk to reward. Let me see how. Let me give you an example and show you how it should have been. So this would have been our entry. Our stop loss would have been here, and our take profit should have been here, all the way to the highest high. And this was the highest high before price started coming there. So this would have been a risk to reward of 1:3.66. But if we now go down into this 15 minutes candle here and look for the demand zone, let's take it down to 5 minutes. I don't know if I'll be able to go that far back with this trading view because I'm not using premium. Let me see if I can. I doubt it will allow me go that far. Hopefully it does. Or it didn't allow me go that far. But okay, let me go to the 10 minutes. Maybe on 10 minutes I can go that far. Um, it's not letting me go that far. But basically, if we had gone down to our 5 minutes, we would have seen another demand zone inside this demand zone that we picked before. We would have seen another demand zone inside this one here, maybe a smaller candlestick, and should have maybe reduced our entry points to somewhere around here, giving us a bigger risk to reward, something about maybe 1:8 as as opposed to the 1:3.66 we would have originally had. So you're looking for your demand zone inside your demand zone on a lower time frame always makes your entry more sniper. Let me look for another example. Let me go to the dreaded gold because I know a lot of people fear to trade gold. Let's see what gold has. So gold is presently, let me go from my four, let's check the 4 hours time frame. Okay, so gold seems to be in an uptrend, and you can see that gold, yes, gold is in an uptrend, and price is most definitely coming to this area. So if you are, for those that trade currency pairs, if you are on gold, you should not be taking sales, even though yes, there might be little retracements, but you should not be going against the trend at all. You should always follow the trend. So okay, there's an example here on the 5 minutes. Although I don't advise to trade 5 minutes for currency pairs. So where is it? So there's a liquidity sweep here. Here's your first break of structure here. There's a retracement, or you can consider this your first break of structure. There's a retracement to give you your, what they call it, retracement to give you your structural liquidity or inducement. That's this. And after your inducement, it went up to give you your second break of structure here. This is your second break of structure. So what do we do? When we've gotten everything, this is your liquidity sweep. This is your first break of structure. You can consider this or consider this your first break of structure. It gave you a retracement And after the retracement gave birth to your structural liquidity or your inducement, and it shot up again to give you a second break of structure. So that signifies that, okay, yes, we are still in an uptrend. So what you have to do is come back down to where your liquidity sweep is and look for your demand zone. So the demand zone is this candle here. All you have to do is draw it out and wait for price to come there and reject from there, and you take your entry. That's it. So this is a pretty similar one or a simple one, and this is 5 minutes on gold. Gold is very volatile. So if you had entered, this would have been your TP. This would have been your TP, somewhere around here, yes. Because this is your highest high here. So this would have been your TP. So this is a ratio 1 to 2.67, ratio 1 to 2.67. Personally, me, I won't take this trade because the RR is very, very low. I like taking trades of 1 to 5, 1 to 6 and above. But some people, if I was giving it out, yes, I would have given this trade out. I would have given it as a low probability trade because the RR is not appealing. Let me look for another. Let's look for another pair. You guys, you can suggest any pair for me to check it out in the comment section. You can just suggest any pair. Okay, somebody said GA. Let's check GA. That's GBP I think. That's GA. So let's go to the 4 hours time frame. You must always get top-down analysis is key for you to determine the bias of the market. So GA seems to be buying, but I think it's going to sell because from my setup, from what I usually look out for, there's a liquidity sweep here. There's an inducement here. You can pick here as your inducement, or some people pick here as their inducement. And there is the supply zone. This is your 4 hours. There's this 4 hour supply zone that price seems to be rejecting from. You can see. So it might definitely sell to somewhere, maybe to here, somewhere around here, or it might sell all the way down to here, or sell all the way down here. But this 4 hours time frame, you cannot wait for one candlestick takes 4 hours to form, so we can't be waiting on that. Let's go down to the lower time frame and see if there are any entry points or if there's anyone that has already played out. Let me see. Let's see. So we've already gotten our bias that it's a sell because price is reacting from the 4 hours supply zone. So if you can look, this is as clean as it gets. If you can look here, you see that there is a liquidity sweep here. There's a break of structure to the downside. There's a retracement here, and that gave us our structural liquidity here. And there was a second break of structure to the downside down here again, if you can look closely. So what you have to do is to mark out your supply zone. That's this green candle before the sudden sell. Let me change it back to yes. So you wait for price to come there and react. And as you can see, price reacted from there and sold down all the way to the downside. This is your TP. Your TP is always the lowest low before price started approaching your POI. This is your lowest low here before price started doing this movement here. Before price started doing this movement towards your POI. So this is your TP. So I definitely think GA is on a downtrend, or the downtrend just started. So if I were you, I would still watch closely, because although it signifies a strong downtrend, because there's this also serves as a break of structure to the downside. This are TP. If you are taking this TP also signifies a break of structure to the downside. Let me see. Is there any? I'm not really comfortable trading 5 minutes on currency pairs. Let me go down to the. Let me go up to the 15 minutes and see if there is a sell continuation. So those that go late on it can hop on the trend and continue. Is there another sell here? Let's see. Okay, there's nothing here for GG. Someone also suggested, I think, was it AU? No, okay, UJ, USDJPY, USDJ, okay, yes, USDJPY. USDJPY seems to be a very strong downtrend from what I've seen. And go up to my 4 hours. Okay, yes, so USDJPY is on a downtrend. And if you can see where it reacted from, you can see that it's the same principle. It works a lot of the time. You can see there's a strip of liquidity here. There's a break of structure to the downside here. There's a retracement that gave us our structural liquidity. This is structural liquidity. Then this is the demand zone where price sold from. This small green candle here. Let me zoom in. This candle here is our supply zone. So this was where price reacted from. So this is where UJ is going to. It's going. UJ is going. UJ is going here. It's going all the way here, down here. So maybe by tomorrow it should have reached here. So this is the same thing I always say. Strip of liquidity, break of structure to the downside, retracement that gave the structural second break of structure. Let me mark out the second break of structure somewhere down here. The second break of structure, and price sold from there. So the setup plays at least 70% of the time. It always plays out. Okay, yes, this is another clean one on the 1 hour time frame. Very, very clean. If you are taking this, it will have. Yes, this is a very clean, straightforward one. There's a liquidity sweep here. This is as easy as it can be, as explicit as it can be. So this is a liquidity sweep. It came down, gave a break of structure down here. It retraced and gave a structural liquidity here for you. And structural liquidity came down again and gave a second break of structure here. And all you have to do is wait for price to come back to your demand, your supply zone, since it's a sell. So this green candle here is your supply zone. Wait for price to come back there. Let's see how price did. So price exactly that spot. That's where price reacted from. And your TP is all the way down here. The beginning of the move, your lowest low before price came to your PY. So this is your where is okay. Yes, so this is it. This is your TP all the way down here. And it takes a whole lot of psychology for you to be able to hold the TP, because these retracements here, some people would have chickened out and closed their trades. But you have to, your psychology trading is not all about technical analysis. So this is basically an example of the sell. This is as easy as it can get. Your liquidity sweep, your break of structure to the downside, your first break, retracements to give your structural liquidity, and your second break of structure. Then now you wait for price to come to your demand or your supply zone and react from there. There's something I also do when price reaches my POI. I don't just take the buy or take the sell. There's another form of confirmation I wait for, but I cannot teach that one today. So I just want for today. Today is just all about mastering the model and backtesting. So let me draw the model again here on the currency pairs chart. It's basically this is the model we just used now for ourselves. This this is it. So what we did, we waited for price to come here and sell from there. So just something like this. And wait for price to come here. So this model is exactly what has been replicated up here if you look closely. So if there's any rule that has not been met, you don't take the trade or you wait for it. So this is your sweep of liquidity. This is your first break of structure that came up. Retracement gave your structural this this is your structural liquidity. Then after your structural liquidity came down to give your second break of structure. If the two breaks are not there, it means the trade might not likely hold. It means that maybe the trend is about to change. But when your second break of structure is there, it means that okay, yes, it's most likely going to hold. The market is not ours. We're just there to collect as much as we can and go out. So yeah, so that's what I think for USDJPY. I think it's in a downtrend. I think it's in a downtrend. Price will most likely by tomorrow, price will most likely come down here and react. Price might react from this demand zone here, this candle. Price might react from here, or price might still go down. So it just depends. What's the time? Okay, it's already 7:54. Okay, so any questions? If you have any question, you can drop it in the comment section. I will respond to every one of them.
Okay, do we have any questions?
Check the chat box. There's a question I'm seeing here. It said, if I get you right, is it always good to we look for entry with the market flow? Yes, the trend rule number one of trading, the trend is your friend. So no matter what, you should not trade against the trend. You might see a setup against the trend, but don't take it because most times it's not going to hit full TP. And we are not here to chicken out, we're here for full TP. Everybody is here to make money. So don't trade against the trend. Don't trade against the trend. Always get your bias from the higher time frame. But if you're trading something like synthetics is a more stable market than currency pair because it's not influenced by the world politics and all that. But if you're trading the currency pair, there are a lot of other things to look out for, like time zone, New York session. Although me, I don't look out for those things. Though. But some people do New York session, London session, and all that. But me, once I see my setup, no matter the session, no matter the time, I'll take it. That's how I am. Once I've seen my confirmation and I've seen my setup, you wait for it, you take it. So that's how it plays out 70 to 80% of the time. On currency pair, on synthetics, it works like magic. And once you see it, you can't unsee it. Once you've trained your eyes to start seeing it, you can't see it. So someone is asking, so trend should be before sweep of liquidity. Yes, before you start looking out for anything, you should always note the market trend. That's what will give you a bias whether you're looking for a sweep to buy or you're looking for a sweep of liquidity for a sell. So yes, your trend should come before and before you once you open the chart, you should know your trend. And one good thing, if you've already, for example, now if you've already known your bias for from maybe your 4 hours time frame, you know that okay, maybe all the trades you take throughout that week for that particular pair will be that same bias. So if like this now, this was a sale, and this sale happened around March, but since we already know that this has been downtrending since when it came to this setup here, that was price reached here 28th of May, and it was still following the same downtrend. So even though it looked as if price was going up here, it looked as though price was going up. We already know that from our higher time frame, price is bearish. So this is a retracement, but some people would think that this move here means that trend has changed to buy. No, trend has not changed to buy. Follow your buyers and keep up with your buyers. Don't don't go against the market trend. The trend is your friend because that's what the market follows. So any other question? Okay, somebody said okay, recommend any beginner's course. For me, it's something that helps me. I know most of you already know that Candlestick Bible. The Candlestick Bible is something that helps a lot. You can read the Candlestick Bible. It helps a lot. Yes, Candlestick Bible. I have other there are, there are other books too, but the Candlestick Bible is the most relevant one that you need, especially as a beginner if you don't know those terminologies. Because even if you can analyze, your analysis will not help you calculate your lot sizing and all that. The analysis will not help you with that. So that's why sometimes people that pay for signals, they still end up in loss because the person providing you the signal will not teach you how to use your lot sizing. So you still have to always do your background. You have to always do your homework. Your technical analysis is not enough. It's never enough. You must have your own knowledge before technical analysis. So I think it's about time, 7:59. So so if there are no more questions, I would like to hand over to Billionaire Jeremy. Thank you so much for the opportunity. It's been a pleasure.
All right. Thank you very much. I'm sure our people have learned a lot. Um, I believe somebody did share that, what do we call it now? That Bible, candlestick Bible or something like that. So if you're interested in it, just send me a chat on the group, and we'll send it to you. For the billionaire who asked what recommended books, so you can send that to you. Other than that, thank you very much, and we'll meet again next week, the same time. We look forward to doing some more. Thank you. Have a lovely evening and a lovely day.